Welcome back, fellow value investors. In this video, I'm going to be covering Starbucks coffee. This company, I'm sure everybody's heard of. You've probably had a cup of coffee at a Starbucks recently, if not today. They are a company that has really become the number one brand in coffee. And a lot of people don't mind, spending $5, $6, $7 on a cup of coffee over at Starbucks. It makes them a really profitable company, and the brand is just really valuable. Recently, their stock's been going down in price, so it's caught my attention. I thought I'd analyze the company to see if it's a good buy for my portfolio. They pay a nice dividend, not the biggest dividend you've ever seen, about 2.5%, but it's an interesting stock to take a look at. I currently don't own any Starbucks, but I'm going to go through the analysis and see if it's a good buy. Starbucks is one of those companies that doesn't need an elaborate introduction because I think most people understand what Starbucks is about. They provide premium coffee and they provide food and they provide an ambiance that's really comfortable. They always have Wi-Fi in their locations. So Starbucks happens to be a place that I've been going to for a couple of decades. The company started in Seattle, Washington many years ago, 50 plus years ago, and they brought over the concept of Italian coffee over to the United States and have since really have provided a lot of coffee for their customers and built a global brand. You can find Starbucks around the world. Their growth has been exceptional over the last 30 years, and they're a profitable company. They also have a really good loyalty program where customers can load their Starbucks accounts with dollars and then spend those Starbucks on cups of coffee, food, and other items. So it's something that Starbucks is really doing well with is the preloaded accounts. They get to carry that cash on their balance sheet. I'm sure they're investing it, making some interest on it. And overall, the loyalty of customers is really high for Starbucks. Let me show you the fundamentals of Starbucks. Their market cap is $103 billion. They are a $36.7 billion revenue company. So you're paying about 3 times revenue for the company. Their PE ratio, their forward PE is 21, which is pretty attractive. The S&P is at around 26. And I consider Starbucks one of the premium brands in the United States. It's a really good company. So that's interesting to me that they have a forward low PE. They pay a dividend of 2.5%, which is nice. Analysts all pretty much say that the stock price is discounted. At least the analysts that I saw about 8 different analyst reports. And the consensus is that it's a good buy. The stock is down 11% in the 1 year comparison. And you can see how the stock has been trending downward, which is interesting. I happen to think, and based on some of the comments that the Federal Reserve chairman shared on Capitol Hill, the economy is doing well. People have jobs, people have discretionary income. So I think people have the wherewithal to go to Starbucks and enjoy their coffee. So I think that the economy is good for Starbucks. So it's interesting to see that their stock price has been going down. Overall, I see an opportunity. I'm going to value Starbucks using their free cash flows that I expect in the future. And then I'm also going to value the company looking at their earnings per share. Let's take a look at free cash flows first. I'm going to start with 2023 numbers and just grow them by 6%, which is going to be the growth rate on cash flows for the first 4 years. And I'm going to grow those cash flows by 6% until we get to terminal value. And the terminal value, I'm only going to grow by 4%. I thought those are reasonable growth rates for Starbucks. Historically, they've grown their free cash flows by 4%, and they're growing their revenues by 8%. So the company has been growing. I'm going to use an 8% weighted average cost of capital. And based on an 8% discount rate, those free cash flows in today's value represent value of $99 billion. I'm going to add cash of $4 billion and take away debt to get to the equity value of the company of $78.3 billion. The company has a market cap of $103 billion. So they're really trading at a 24% premium on their stock price. That might, explain why the stock price has been going down. The earnings per share look good, $4.20. I'm going to give them a PE of 26 because I think they deserve a PE of 26 to match the S&P and grow those earnings per share by 4%. And based on those numbers, I get a value of $93.05, which is a little higher than their current stock price. So they actually have about a 2% discount if you use earnings per share. I blend the two, but I take more weight of free cash flow and I get to a 15% premium that you'd have to pay to buy Starbucks. And Starbucks is a really good company, and I'm okay paying a reasonable price for a great company, but 15% might be unreasonable. I would want to wait until the stock price comes down before I would buy shares of Starbucks. So let me provide a summary on Starbucks. I think the company is excellent. I think they're in a really good business. They're number one in their category. The industry's good. I mean, they charge, $5, $6 for a cup of coffee, and there's a good margin in their business. And the company's really operated and performing well. The balance sheet's fine. It's a good balance sheet, less than 3 times EBITDA, or debt is less than 3 times EBITDA. But there's no discount on the stock. And I'm a value investor. I need a discount in order to buy into a company. I'm willing to pay a fair price, which would be, close to a 0% discount on a great company. But Starbucks just commands too much of a premium at this time. So I will be a holder or seller of Starbucks. I don't own any Starbucks stock, so I won't be buying any. If I did own Starbucks stock, I may consider selling. So Starbucks is just a great American success story of them really bringing premium coffee to the marketplace, and having a brand that everybody knows. And whether you have a cup of coffee in New York or Austin, Texas, or Los Angeles, you're going to get a good cup of coffee from Starbucks. And internationally, they're doing really well. So the company is a really good company. It's just getting the right price on the stock is a trick to investing. So I'm probably going to wait and just keep an eye on Starbucks. Hopefully the stock price keeps going down and I'm able to acquire more shares at a reasonable price for this great company. I appreciate you watching. I hope you found the video interesting.